Hi, this is Bernadette with By the Book Accounting with a quick tax tip for you. We've often known spring and summer to be wedding season. I know a lot of people who have gotten married in those during that times of the year, and I've definitely attended lots of weddings during that time. And it's a happy time. It's a great time of year to get married. The weather is nice. The scenery is beautiful for outdoor weddings. It's just a really great time. And I know when it comes to weddings, there's a lot of planning that goes into having a wedding. You have to get the venue, the guest list, staying within your budget. All those things, it's a lot that goes into planning a wedding. Today's tax tip is encouraging those who are getting married, considering marriage, to also think about the tax consequences of getting married, because tax planning should really be a part of your wedding planning. Now, I know it's not romantic, and I love tax accounting, and it's not romantic to me, so I don't really expect it to be romantic to you. But I would like to encourage you to understand the importance of at least having a conversation around how does this marriage affect our tax situation. I found that a lot of people don't realize that when they get married, that after they get married, they have to file a married tax return. And it really doesn't matter when you get married. So if you have a summer, spring, or winter wedding, you will have to file a married tax return if you are married on the last day of the year. So you can be single for the entire year, get married on December the 31st, and because you were married on the last day of the year, you will be required to file a married tax return on that for that entire year. And so when you're picking your date, you might want to consider those things. I know I did. So when you are and unfortunately it also applies to divorce. So if you get divorced and your divorce is final on December the 31st, then you don't have to file a married tax return. But this is not about divorce. This is about our married people. And so things that I want you to consider is that when you file a married tax return, will this tax return disqualify you from certain tax credits? I've seen that happen where the joint income might disqualify you from child tax credit, earned income credit, some of the education credits, things like that. Will this joint tax return put you and your spouse in a higher tax bracket? And so now you will have to pay more in income taxes because of this tax bracket. And then you also want to consider if your soon-to-be spouse has any liabilities, outstanding liabilities, whether it's taxes, child support, or student loans. Those are also things that will affect your tax return. So these are topics that you want to have a conversation with your accountant about, just to see if these things will affect you and how they'll affect you, so that you won't be surprised. I can't tell you how many times I've prepared tax returns for newly married couples and they're surprised at the fact that they owe. I've had couples to say, well, I've never had to pay before. Well, they've been single, and so now they're married, and it may be a total game changer. So there are lots of things that you want to consider when you are planning your wedding. So on that wedding to-do list, make sure you put your tax accountant on the list of people that you need to talk to. If you need an accountant, I'm happy to be your accountant. Again, I'm Bernadette with By the Book Accounting. Thank you. Let me know if this video was helpful. Like, share, and definitely subscribe. Have a great day.